Welcome to VectorVest special presentation, this week titled, The Tide is Turning. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be your presenter this evening. News and uncertainty, worry, have been driving the market lower. You know the drill. Fed rate hikes, tariff wars, slowing economic indicators, peak earnings, inflation jitters, Brexit, Italy, Greece, yield curve inversions, debt overhangs, etc. Even as yesterday's worries fade, there always seem to be new worries to take their place. Can you think of the last time there wasn't anything to worry about? Investing as an emotional response rarely produces good results. Market pundits prognosticate about where the market is headed right after confessing that no one can really predict. Of course, VectorVest has been covering this topic at length, and when you think about it, really from our inception. Dr. DeLito captured this in his special presentation from November 9th of this year titled, How the Market Works. In his presentation, he begins with the premise that stock prices rise whenever the news implies that the economy is improving and earnings are rising. Of course, the opposite is also true. Stock prices fall whenever news implies that the economy is weakening and earnings are falling. He also demonstrated the dramatic correlation of earnings and stock price performance and how inflation and interest rates inversely impact the economy and stocks. He followed up that presentation with his essay the following week. The essay was titled, Perception is the Reality. He writes, if you watched last week's special presentation on how the market works, you may recall that I ended the presentation by saying the bull market will continue as long as it is perceived that earnings are rising. Given that it is commonly believed that the Fed will raise interest rates in December, the economy will slow down, and corporate earnings have peaked, millions of predictions have been made of an imminent bear market. Refer to my essay of September 14th, 2018. While I don't agree with those predictions, millions of investors, including the bearish financial professionals who appear regularly on TV, can and do move the market. I can't help it when the majority of investors believe earnings will be lower when they're still rising, and they take the market down for the wrong reasons. I don't move the market, and I don't fight the market. Their perception is the reality. Of course, I don't need to tell you, the recent news is all about the economy weakening and earnings are likely to fall. The only problem is, earnings are not falling. In fact, by our analysis, they're still rising. The green line is the earnings data taken from the S&P 500 watch list, and we can see that the earnings are still rising right up to current. The blue line is the growth rate of those earnings. So earnings are actually still rising, although their growth rate has slowed. Will they continue to rise, and for how long? Well, the current perception seems to be the end is near. Maybe they're right, maybe they're wrong. We don't make predictions, we look for evidence. We will know that the market is ending when we see evidence that earnings are starting to go down. Of course, this analysis provides a strategic frame of reference. As we've seen, the market can still be swayed with news and opinion, and we don't want to fight the market. So we also need to have a tactical approach that navigates the market's swings. Here's a market timing graph of the VectorVest composite price action over the last year on daily candlesticks. From this perspective, the current market condition is the product of the market reevaluating prices in light of higher interest rates and slower earnings growth, tariff wars, and all those other bearish headlines that foster uncertainty. How will we know when the market's satisfied? We'll look for evidence the market has stopped falling and started to rise. Of course, the sooner you make the call, the greater the rewards, if you're right, but waiting a little longer may save you the pain of some quick reversals. But did you notice our analysis of both the bull and bear market scenarios as well as the stock market price direction were based on evidence? I want to draw to your attention an essay that Dr. DeLito wrote. It was from June 4th of 2004 titled The Primary Wave. Imagine that you're standing on an ocean beach watching the waves roll in. You're noting the watermarks and see that more often than not they advance to higher levels on the beach. A storm is brewing on the horizon, the wind is whipping up, and the waves are getting higher. Barely noticeable in the distance, a boat is docked at a pier. After a while, the storm passes, the wind recedes, and the waves lessen in size. The watermarks, however, continue to move higher, and the boat rises in its moorings. The tide is rolling in. I use a model such as this to interpret the price movements of the market. In my mind, I see the price of the VectorVest composite, the VVC, as represented by waves on the surface of an ocean. Its movements may appear to be random, but they are not. So we track them very carefully. We note the day-to-day and week-to-week changes in the price of the VectorVest composite to see whether the watermarks are moving higher or lower. I might apply that same methodology or theory to the price action. The high watermarks of price action, are they getting consistently higher? Uptrended markets establish higher highs and higher lows. Conversely, falling markets establish lower highs and lower lows. Like the waves in an ocean, the VectorVest composite is often affected by events that cause it to change abruptly. In this graphic, we see the short-term moving average is very responsive to changes in price action and follows price action relatively closely. The longer-term moving average is much less responsive to price action and has less variation. In this example, while the waves have been building and falling, the tide has been steadily rising. Dr. Giolito continues in his essay, nearly 10 years ago, I observed the price of the VectorVest composite accurately reflected the behavior of the market. This observation led to the creation of our market timing system. In particular, we look at the price movements of the VectorVest composite. We measure the short-term trend direction and strength with our relative timing indicator, and we study the market strength or breadth with our buy-sell ratio of all the stocks in our database. Finally, we compute the market timing indicator, which is like the tide. It reflects the underlying trend of the market. So everything starts with the price of the VVC. It drives the direction of the RT, dictates the level of the buy-sell ratio, and ultimately defines the MTI. On March 18th of 2016, we offered a special presentation titled Identifying Major Turning Points, which runs through those timing signals but also identifies 5 ways to identify when a market reversal becomes more likely. That evidence we're looking for. These 5 methods, among others, include candlestick patterns, support and resistance levels, derby winners, divergences, topping and bottoming MTI and buy-sell ratio levels. They can all be applied to our current market to help us discern if and when the tide has turned. Let's take a look. I've opened up the program to the home page, and quickly I can tell just by glancing at the home page that the market timing system is bearish. But let's go to the graphing tab and let's open a market timing graph. Here we're looking at a market timing graph by default, looking at a 1-year time frame, daily candlestick patterns. On the top graph, the price of the VectorVest composite. We also have subgraphs for each of the components of the market timing system, the MTI, the buy-sell ratio, and the RT. Looking at the price action, we can see that the market has corrected, but that downtrend has stalled now as prices stopped moving lower. Remember, looking for those lower lows and lower highs, or vice versa. Let me zoom into 3 months of time frame, and we'll see if I snap a horizontal line, we can see the price had come down and tested these levels a couple times. Today's price action actually breaking through that level to the lower low, an indication that our downtrend is still intact and that this pessimism is widespread and running deep. We also look to the candlestick formation itself. This bearish candlestick has little wicks, gapping down at the open and closing near its low of the day. For the reversal patterns, we'll be looking for things like bullish haramis and bullish engulfing patterns, but widely expanding candlesticks that have short wicks but are moving to the upside. So no signs of a likely price reversal here. We don't have the views updated yet for tonight's market action, but looking at yesterday's market action, all of our winners on both a 1 and a 5-day basis are all bearish. So on a upward reversal, we'll look for these 1-day winners to all turn bullish and see some explosive gains. Turning back to our market timing graph, we also look for divergences between the MTI, buy-sell ratio, and RT performance and the price performance. Situations where the price may move to the lower low, for instance, but one of our indicators moves to the higher low. Looking at the current situation, price action breaking down today, and our buy-sell ratio, MTI, and RT indicators all moving to lower values and significantly to lower lows. And finally, of course, we look to the absolute values of the MTI and the buy-sell ratios. When the MTI is below 0.60 and the buy-sell ratio below 0.20, we start looking for a bottom, quote unquote. This means the indicators are at or near their historical low points, and that downside potential is becoming rather limited relative to upside risk, and we'll look for an explosive move of not only that price action, but of these indicators to move higher with that price action, indicating the change in price trend. Of course, each of these indicators, each of these studies, alerts us that we're nearing potential turning points. But remember, we're always looking for evidence that we've made the turn. So we'll look for that explosive price action, and then we'll look for the changes in the market timing signals. We'll see the primary wave change from down to up. We'll start seeing green lights appear in the price column of the color guard. We'll get the RT kicker confirmations and the DEW signals turning up. And if the trend continues, then ultimately we'll get our confirmed up call. But the foundation is evidence-based analysis. If you'd like more help with that analysis, we provide it on a daily basis in the VectorVest views. So news and uncertainty have been driving the market lower, but are things really as bad as many experts think they are? Well, now you can identify for yourself if and when the tide is turning, using an evidence-based approach. Thanks for watching.